Welcome to Auto News Talk. Picture this. You walk onto a car lot, and the sticker price on a basic family SUV looks, well, like a down payment on a house.
Yeah, it's pretty staggering.
Right. And inside the showroom, the dealer is sweating because the government is breathing down their neck, basically dictating what types of engines they are even allowed to sell.
Exactly, yeah.
And meanwhile, the independent mechanic down your street, they are literally fighting Congress just to get the password to your new car's computer data. So our mission on this segment of Auto News Talk is to map out this modern automotive ecosystem.
And the terrain we were walking through is incredibly complex. I mean, if you just look at the headlines, it seems like a bunch of disconnected car news.
But it's not, is it?
No, not at all. It is a story about a massive multi-front squeeze. We are looking at this ultimate balancing act between, a desperate need for consumer affordability on one side and ground-level dealership survival tactics on the other.
Oh, and looming over all of it, you have sweeping top-down industry mandates.
Exactly. When you look at the entire landscape, every single player in the automotive space is feeling immense pressure, and they are all feeling it from entirely different directions.
Okay, let's unpack this, because to really understand the mechanics of this industry, we have to start with the people actually writing the checks, which is you, the buyer.
Yeah, the consumer is where it all starts.
Right. And there is this Auto Buyer Insights report that paints a really stark picture of the extreme affordability pressures shaping the market.
It's fascinating. It shows that tighter budgets are completely rewriting the rules on what shoppers buy and exactly how they finance those purchases. What really stands out in that Auto Buyer Insights report is their classification of the market as K-shaped.
Wait, hold on. I know economists love throwing around letter shapes for market trends, but what does a K-shaped car market actually look like for our listeners on a practical level?
Sure. So think of the capital letter K. You have a single starting point, and then the economic reality splits in two completely opposite directions. The upward arm of the K represents affluent buyers. They are completely insulated from inflation, so they easily sustain the premium and luxury vehicle segments. But the downward arm of the K represents everyone else.
And they're getting squeezed.
Big time. Value-focused shoppers are getting squeezed out. They're being forced to pivot heavily to used cars, and they are often relying on things like tax refunds just to make the down payment math work.
And the math is brutal, honestly. The report highlights that average new vehicle list prices are hovering near $50,000.
$50,000, it's wild.
It really is. It is no wonder that among people who have decided not to buy a car, fully 53% of those non-intenders cite affordability as the absolute #1 reason they are staying out of the market.
Right.
Yet, despite that massive financial wall, the underlying demand is incredibly resilient. 39% of adults are still considering a purchase, and 65% of those likely buyers expect to trade in their current car. But here's the part that surprised me. Millennials are the major demographic driving this.
Well, it makes perfect sense when you look at life stages. Millennials are aging into family expansion vehicles. They need the three-row SUVs, the minivans, that sort of thing.
The minivan phase, right?
Exactly. So automakers and dealers are being forced to adapt. To convert this pent-up, reluctant demand into actual sales, the Auto Buyer Insights data implies they have to start pushing the cheaper base models.
They need value-oriented trims and much sharper pricing.
Yeah, they have to engineer ways to reduce that initial sticker shock. And a huge part of that calculation involves what is under the hood. The report breaks down future purchase intent. 50% plan to buy traditional gasoline, 33% are looking at hybrids, and only 16% plan to buy a battery electric vehicle.
Wow, only 16%. I look at that number for battery electrics, and it seems heavily constrained by higher upfront prices and, of course, range anxiety. But here's the blind spot in that specific Auto Buyer Insights report. What this doesn't answer is exactly how fast the charging infrastructure will catch up to alleviate that range anxiety. Infrastructure is the massive missing variable keeping that number at 16%.
Exactly. It paints a picture of a very slow, cautious consumer base.
It feels like buyers are stuck between a rock and a hard place. You want an affordable car, but the cheaper ones use gas, and gas prices can be incredibly volatile.
Which changes everything.
It does. But here is where it gets really interesting. When you look at competing data from leasing.com, that narrative of slow, cautious EV adoption suddenly shifts.
Oh, it completely flips upside down. The leasing.com figures show a massive, explosive surge in EV and hybrid leasing inquiries.
And they link it directly to sudden spikes in fuel prices, right?
Yeah, exactly. According to their data, petrol and diesel combined only make up 32.8% of inquiries. Meanwhile, combined electrified interest absolutely dwarfs that, hitting 67.2%.
That is a huge jump.
And the most astonishing statistic, battery electric vehicles moved from second place to first, hitting an unbelievable 42.8% of all inquiries.
Wait, really? Almost half of everyone looking to lease suddenly pivoted to electric overnight.
Yes, that is not a trend. That's a panic response.
It really is.
And what's fascinating here is the psychological shift. The leasing.com report attributes this to rising petrol and diesel costs, which they tie to global oil supply route disruptions.
So when fuel prices spike, that immediate visceral pain at the pump temporarily overrides the upfront sticker shock of an electric vehicle.
Exactly. Add in the tailwinds mentioned in the report, like lower-cost Chinese EV models entering the market and salary sacrifice schemes, and the consumer calculus changes overnight.
Stop right there. For our listeners who aren't familiar with the term, what exactly is a salary sacrifice scheme?
Oh, sure. It is essentially a benefit where an employee agrees to give up part of their pre-tax salary in exchange for a non-cash benefit, and in this case, an electric car lease.
Okay, so kind of like a pre-tax 401k or pension contribution, but instead of a retirement fund, you get a vehicle.
Exactly. It drastically lowers the monthly cost of an EV.
Okay, that makes sense, and it definitely sweetens the deal. But we have to look at the boundaries of this data.
Right.
My biggest question coming out of the leasing.com report is how many of these are just window shoppers? What this data doesn't answer is whether these figures reflect inquiries or actual signed lease agreements.
That is a crucial distinction. It measures curiosity and intent driven by fuel panic, but pulling the trigger on a 3-year lease is a much higher hurdle than just filling out a web form.
Exactly. The intent is highly volatile.
It really is.
So think about this from a business perspective. If buyers are this volatile, torn between expensive EVs, reliable hybrids, and fluctuating fuel costs, how on earth do dealers manage their inventory?
It's a nightmare for them.
You can't just stock a lot full of EVs if people decide the next day they want gas. And you can't stock only gas if a sudden fuel spike sends everyone looking for a battery.
And that ground-level volatility is severely compounded by external pressure. Dealerships are facing intense pressure from top-down government mandates that do not match what the consumer is actually asking for.
Yeah, the account from the National Franchise Dealers Association, or NFDA, illustrates this friction perfectly. They met with a Liberal Democrat MP to discuss the UK's zero-emission vehicle mandate.
And for context, this mandate sets legally binding quotas for the percentage of zero-emission vehicles that an automaker must sell.
The dealers are absolutely terrified of it.
Oh, completely. They fear that manufacturers, desperate to hit these government targets and avoid catastrophic fines, will artificially limit the deliveries of high-demand hybrids and gas cars to the dealership lots.
I need to push back on this a little, or at least get some clarity. Why would a manufacturer do that? If a customer walks onto a lot with $50,000 ready to buy a gas-powered SUV, why would a business refuse to sell it to them?
Well, it's because of how the penalty mechanism works. It is like the government telling a restaurant they can only sell 1 burger for every 3 salads.
Okay.
If the customers only want burgers, the restaurant misses the ratio and faces massive fines. To balance the math and avoid the penalty, it financially makes more sense for the automaker to literally withhold the profitable gas car from the dealer than to sell it and pay the massive fine.
Wow. So they are literally choking off the supply of the cars people actually want just to force the ratio.
Precisely. And this threatens dealer profitability, their incredibly thin profit margins, and ultimately, local jobs.
It is interesting how carefully the NFDA phrased their pushback, though. They explicitly stated they are strictly asking for a review, not a repeal, of the mandate to ensure a sustainable transition.
Right, they have to walk a fine line.
Exactly. They aren't saying they hate EVs. They are saying they need a predictable supply of a broad model mix to match what customers actually want to buy. Because if dealers have to play these games with their inventory just to survive, who pays the price?
The consumer does.
Exactly. You do, the listener, because you lose the ability to negotiate when the supply is artificially restricted.
Yeah, dealerships require a diverse supply of cars. They rely on turning inventory over quickly. If the lot is full of vehicles mandated by the government but rejected by the local consumer base, the entire franchise business model breaks.
And I noticed the NFDA keeps pointing to quote-unquote reversals in U.S. EV policies as a defense for their position, arguing for global alignment.
Yeah, they lean on that heavily.
But frankly, the account leaves the details completely blank. They use this reference to U.S. policy as a shield, but what this account doesn't answer is what specific measures or reversals they're actually talking about.
Right, which leaves the dealers to navigate this regulatory storm largely on their own.
Which brings up an incredibly practical question. If you're a dealer facing $50,000 consumer price ceilings, wildly fickle fuel buyers, and rigid government quotas, how do you actually sleep at night?
Good question.
I mean, how do you protect your business from all of this chaos?
Well, you build a fortress. And according to a profile on the Canon dealership empire, that fortress isn't built out of capital or inventory. It's built entirely out of culture.
Yeah, Michael Joe Cannon runs a 37-store empire, and his strategy is a masterclass.
It really is. It proves that radical, people-first culture acts as the ultimate hedge against market volatility. The profile details a strict no-layoff policy. Even through extreme global supply chain disruptions, when other massive dealer groups were slashing payroll just to survive the month, the Canon Group held the line.
That's impressive.
Yeah, they focus on heavy, relentless coaching over firing. Separations are an absolute last resort.
And their hiring strategy is wild. He specifically targets former athletes. I hear that, but does being good at football or baseball really translate to selling a $50,000 hybrid? I mean, that sounds a bit like corporate motivational speak.
Oh, yeah, it sounds like a cliche until you understand the mechanics of automotive sales. He hires athletes not because they know how to calculate a lease money factor.
And a money factor, for our listeners, is basically just an interest rate wearing a fake mustache. It's a weird decimal used in leasing.
I love that description, yeah. You can teach anyone the math behind a money factor. What you cannot teach is resilience. In car sales, you are told no constantly. It is an industry built on rejection.
So he wants people who are used to losing.
Canon targets athletes because of their proven recovery from rejection. They are physically and mentally conditioned to lose a play, reset, and run the exact next play with identical intensity.
That makes a lot of sense. And they codify this entire culture with the Canon acronym. Communication, attitude now, meaning act now, not later. Offense, play offense over defense. And nobody beats the deal.
Right. And the implication in the profile is that this intense workforce stability protects against all those inventory swings we just talked about.
Definitely. In fact, when an independent seller wants to exit the business and sell their dealership, they often choose to sell to Canon specifically because they know their employees will be protected.
Absolutely. But more importantly for their bottom line, they rely heavily on service-led customer growth. They actively welcome service customers who bought their cars somewhere else.
So they use the service drive to demonstrate value, build trust, and eventually convert those people into sales customers down the line. It is a brilliant long-term loyalty play.
It really is.
But, every fortress has a weak point. My biggest question coming out of this profile is how this philosophy scales if a severe macroeconomic crash hits. If the fundamental economics of a small market completely collapse and the local talent pool dries up, you can coach an employee all day long, but you cannot conjure buyers out of thin air.
Yeah. What this philosophy doesn't answer is how it survives a truly structural collapse. You can't outcoach a severe recession.
True. But I want to latch onto a crucial detail you just mentioned from the Canon playbook. They use the service department as an acquisition engine.
Yes, they do.
The service day is their ultimate profit center and their customer retention tool. But here's the twist. Who actually owns the data required to fix your car in that service bay?
Oh, this raises what might be the most important question in the industry. It is the subject of a massive legislative battle over vehicle data access, and this fight could completely reshape dealer service revenues.
Yeah, we're talking about the Repair Act, specifically House Resolution 1566 and Senate Bill 1379. This is a bipartisan push to guarantee that consumers and independent repair shops have access to onboard diagnostics and telematics.
Telematics is the absolute key word here. Modern cars are no longer just mechanical machines. They are rolling supercomputers that wirelessly transmit diagnostic data back to the manufacturer.
It's basically a smartphone on wheels.
Exactly. Right to repair advocates argue that equal access to this data prevents digital gatekeeping. They argue that without this legal access, independent shops face exorbitant costs for proprietary scanners and software, turning basic mechanical jobs into impossible software tasks.
And the consumer sentiment is overwhelmingly in favor of access. A poll from the Car Coalition cited in the coverage shows massive bipartisan support. 85% of Trump voters and 86% of Harris supporters back this kind of legislation.
Wow.
Yeah, and we are reporting these figures impartially, strictly as a measure of consumer sentiment. It shows that regardless of where you stand politically, vehicle owners overwhelmingly want control over their own vehicle's data.
And if we connect this to the bigger picture, the financial stakes for the industry are monumental. Over 75% of post-warranty work usually happens at independent shops.
Right.
If those independent mechanics are locked out of the data, that massive volume of work is forcefully funneled back to the dealership.
Exactly. Automakers and dealers vigorously oppose the Repair Act. They argue that repair data is already widely available through an existing voluntary industry agreement. Their main counterargument centers on cybersecurity and safety risks, warning that unfettered mandated data sharing could make vehicles vulnerable to hacking.
Which is a valid concern, sure.
But let's look at the actual business mechanism here. Why are dealers fighting so hard to keep this data exclusive?
Well, it is all about the first mover advantage. Imagine your car gets a tiny engine misfire. Before the check engine light even blinks on your dashboard, the car has already silently texted the diagnostic code to the dealership.
It's a little creepy.
It is.
Yeah.
The dealer can call you and schedule a repair before you even know the car is broken. If dealers lose their monopoly on that telematics data, they lose that first mover advantage. It would be a massive, devastating blow to their most reliable profit center.
The coverage mentions that automakers floated a counterproposal called the Safe Repair Act, emphasizing that cybersecurity aspect. But the frustrating part of this report is that it is essentially just a title.
Right.
What this report doesn't answer is what actual details or compromises are inside that alternative.
Right, it's a shield without a blueprint, which leaves the service bay as an active, unresolved battlefield.
Okay, so let's step back. What does this all mean for you, the listener? We have mapped the terrain from the K-shaped buyer market to the mandate-squeezed dealership lot to the data-locked service bay.
Yeah, if we synthesize all this, three massive themes really emerge across these sources. First, the affordability and electrification collision.
Right, supported by the Auto Buyer Insights report and the leasing.com data.
Exactly. Both prove that the transition to EVs is not driven by ideals. It is entirely dictated by the consumer's wallet and the immediate painful price of fuel.
Totally. And a second theme is the post-sale profit battle. The real sustainable money in the automotive ecosystem is moving to the service bay. This is heavily supported by the Canon Empire's reliance on service-led growth and the intense legislative fight over the Repair Act.
Absolutely. And the third theme is top-down rules versus ground-level reality. We see this friction clearly in the NFDA begging for a review of the ZEV mandate, and we see it in the Repair Act trying to legislate data access.
The rules written in government chambers are clashing violently with the realities of running a business and buying a car.
Yeah. And within those themes, there are two stark contradictions we have to acknowledge. First, the Auto Buyer Insights report shows a very steady, slow battery electric adoption rate of 16% due to high prices and charging fears.
But the leasing.com data completely contradicts that trajectory, showing a massive 42.8% surge in EV interest, the very second fuel prices hurt the consumer.
Exactly. The second tension is the literal battle for your garage. The Canon profile shows dealers desperately relying on their service bays to survive inventory and margin chaos.
But the Repair Act coverage shows independent mechanics aggressively trying to break the dealer's grip on the repair data. They are fighting to the death over the exact same slice of pie.
The practical takeaway here is profound. Buying the car is no longer the end of the transaction. It is merely the beginning of a subscription.
Wow, yeah. The screen in your dashboard isn't just a radio anymore. It is the active battleground for your personal data, your service dollars, and your long-term loyalty.
Exactly.
Every mile you drive is generating data that multiple massive industries are fighting to control. That wraps up our coverage for this segment of Auto News Talk. We've covered a lot of ground, but we want to leave you with one final thought to mull over.
Think about this. Next time you see a check engine light illuminate on your dashboard, ask yourself, who is that car actually talking to? Is it talking to you, your trusted local mechanic, or a corporate manufacturer sitting hundreds of miles away?
Keep a close eye on how these data access laws unfold in your local legislature, because the outcome will directly impact the total cost of your next vehicle. Thanks for joining us on Auto News Talk.